Good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 and the NASDAQ 100. And it's being recorded on Sunday, January the 14th, 2023. I am going to start with the SPX, which is the cash market, but just a little bit of an overview. The markets continue to present some very, very interesting moves in terms of where we are, what we can expect, and how the market is interpreting forward. And it remains interesting against the backdrop of what's actually happening all around us in terms of within the United States, within the US debt, within interest rates, within the Fed, et cetera, and within corporate, because we're starting earnings season, and we did have some earnings on Friday prior to the opening. And banks that reported were not stellar, like blow the doors off, we're making a ton of money. They were very cautious, did well. They're not, showing anything severe, but they're not showing the profit levels I think that the markets were expecting. Nonetheless, they are cautiously, or were cautiously higher on Friday. Now, also reporting was Delta Airlines, and Delta Airlines did report they weren't that great, and the stock took a little bit of a beating because of that. So we're beginning to see already some continued drag on corporate profits and on the earnings that are coming via what we're seeing happening in the economy, what we're seeing happening within these different sectors. So we're going to continue just to see how these all unfold. But in the meantime, what we also saw last week was another intense thrust of capital into the market, and primarily going into, it actually went into some of the small caps, where we saw in the Russell some extremely strong buying of small cap stocks, mid cap stocks. And within the larger indexes in the S&P and the NASDAQ, we saw again this drive back into big name artificial intelligence sector stocks, and that being NVIDIA, AMD, Microsoft, Google, Amazon, not necessarily because they are an AI stock, but they do benefit from artificial intelligence. While on the reverse side, we saw stocks like Tesla get absolutely just smacked in the face. So again, the capital movement into the market remains strong right now. And so taking all of that in together, I am continuing the count here in the S&P and in the NASDAQ, which I'll get to in just a few moments. But we continue to work through a primary degree ABC to put in and complete a cycle degree fourth wave. So the largest degree that I'm counting right now is a cycle degree fourth wave. So cycle 3 topped out at 48.18 basis the cash market. That's where I'm starting in the SPX. And we have now put in a primary A wave, and that's about it. It's not that's about it. That's all we've gotten so far. So we remain within a primary B wave. And within that primary B wave, there will be an intermediate degree A, B, and the C. And that's the section we are in right now, the intermediate C wave. So within that, there are going to be 5 waves of minor degree, of which we've done minor 1, 2, and 3. Now, basis the futures market, the S&P has moved to new all-time highs. Basis the futures market, we've only gotten to 48.02 here on the cash market, but I am not 100% certain, but I'm feeling very strongly that we will exceed and move into what would then be considered an irregular B wave. And what we mean by that, as Elliot did tell us, that it is where the market will go above the starting point of the A wave and or below, depending on the direction and the position of where this wave would occur. So here, that high is 48.18. So I am anticipating now that the cash market will get itself above 48.18 and then start to move higher as it goes towards the high again for that primary B wave. So being that in mind, and now we're adding or just trying to also focus and bring into the picture what's happening in terms of national debt, what's happening in terms of the government coming to terms of not going into a shutdown, that they will agree and they will push forward and pass a resolution to raise the debt ceiling and to fund the government for a little bit longer than 90 days or 3 months or whatever it is that they're going to be looking for, a little bit long term, like the balance of 2024. And from what we understand, and that did also help for the market to really put in some stronger up days last week, that the House of Representatives had come together and were all in accord on passing a resolution or a debt ceiling agreement that would fund the government. So a budget that would fund the government through the balance of 2024, I believe. And now working together with the Senate to get both the House and the Senate passing the deal, which would then go to the president for signature. Now, that's not a done deal yet. We do have the Speaker of the House talking about that he is not going to go back on his word, saying that there is an agreement in place. And so, but it still has to come to the floor of the House of Representatives, and it still must be passed by a majority. And if the particular section or sector within the GOP House majority, it still could not pass. Now, that would be a real big problem, and should it happen, it could produce a really negative reaction from the market as we again confront the possibility of either a partial shutdown or a full shutdown of the government. So again, but on top of that, we did see last week an incredible inflow of capital again into the market. Now, basically, starting on January the 8th, we saw a very strong up day across the board as money began to move back in to, in particular, the Russell. So that were mid-cap stocks is where I basically saw quite a bit of it, to be honest with you. So now it's kind of interesting to see how they're going to get all this passed and how the Fed. So we have to understand is that also that Powell came out and started to make a statement basically pivoting, and that the Fed is going to be ending its tightening campaign. Even though, and this was all last week, even though, just a few weeks ago, he was basically stating it might be a little bit premature to speculate on when we're going to start to cut the rates. So what needs to be understood here is that they remain committed to their target, to their inflation target. But right now, that inflation, the actual inflation rate remains above the unemployment rate. So when we consider all of this, we have to understand that there's only really five times in the past 90 years that the Fed has actually cut the rates when the core CPI was higher than the unemployment rate. CPI came in at 4%. The unemployment rate is 3.7%. So now those cuts, again, if we take a look at when they happened, they were triggered by war, which would have been in 1942, and that was World War II. And then also the additional four times was recession. And that was in October, of 69, August of 74, May of 80, and July of 81. Those were all periods of recession. And the government or the Fed lowered the rate. So is the Fed now basically saying, well, we may pivot, even though we're going to continue our fight against inflation, but inflation is higher than unemployment, and instead of vice versa. But if we look at the last time, that would suggest that the Fed may be feeling a little bit stronger, that we are not going to have such a soft landing after all, and that it might be a little bit harder, a little bouncing, a little hard bounce. And so that would produce, of course, the recession, which many are calling for. So we'll see, but that's out there. The second thing that really kind of is interesting is there's other reports that have come out. Now, here's the big one, that 10 days ago, from last week, 10 days ago, the debt of the United States stood at $33 trillion. 10 days later, we've now surpassed $34 trillion. And they're now projecting that by June, we'll be at $35 trillion. Now, that is got to be the grayest and darkest gray cloud that can hang over the entire country. Now, I'm not going to politicize this. That's what they're trying to do in Washington by saying what needs to be done. But do your own research as to why the government is in such a debt problem, why we have to continue to borrow money. And quite frankly, it's because of two administrations in the past giving incredibly high tax breaks to corporations. So with that in mind, we're now paying that price. And from what I understand, one of those tax breaks or tax cuts comes off, I believe, this year, and the next comes off next year. So, but in the meantime, we're continuing to just kind of really dealing with some stuff. Now, this is all the economic stuff that I just want to kind of toss out there that really is going to be behind it, and then I'm going to jump in to what's going on. One of the next things that I really find very interesting is that we have there's a problem going on in the Red Sea, and that's a major shipping channel that goes up from the Mediterranean, comes down through the Suez Canal, comes down all the way down into the Red Sea. From the Red Sea goes through the Straits of Hormuz, and then out, and then to Asia, and etc. Well, there's a little bit of a problem there, and we've all read about it. We all know what's going on, and the U.S. has now gotten involved and kind of started to take out some of the problem, but it is having an effect on shipping. And so what we're seeing immediately coming out here, what we're seeing immediately is that the container shipping rates are going up. Well, it almost seems that they're going up exponentially, parabolically. And a lot of that is due to what's happening in the Red Sea. Now, is that then going to be the next supply-driven inflation? I mean, it's already in place. Is it going to be reflected in the numbers? That's out there. That's out there. So the geopolitical is what really is behind all of this. So again, what I said, we got geopolitical things going on around our globe. Now, one of the hotspots is right there. And what is the effect? And so the volumes in the Red Sea, on the maritime, is like, wow, just like gone, dropped very, very, very dramatically. the start of this year. So the freight rates have actually gone up 120% in the last 6 weeks. So there's quite a bit going on. Now, also what we're seeing is this inflow, this cumulative inflow in the first 2 weeks of this year. And on one hand, we got about 182 billion. And that's just in equities. And then we also have a largest inflow into bonds. So again, well, we're getting a lot of money's moving back into the market. And is that a bad thing? Well, not necessarily so. And now here's the same thing that I'm going to say, that what we got going on is that, again, you all know, because I keep repeating it, that I live in San Francisco. So within San Francisco city and county, right? We're one of the only in the state of California that both the city and county, same name, San Francisco City and County. So, but another large hotel basically is walking away from the loan. I believe this one was $97 million. And so it hasn't gone into receivership yet, or the lender hasn't stepped in and taken it back, and into like in a foreclosure. But this is just continuing a very negative drag on the local scene here in San Francisco in terms of commercial real estate. That we're seeing a lot. Now, on the uptick side of that, we're also seeing other buildings actually reselling. But while you might want to consider that an uptick, they're being sold at almost 50% or greater less than what the last sale was. So prior to the pandemic versus after the pandemic. So while the problem is not just confined to San Francisco, but it is being felt pretty hard here. And so I leave that out there because I know that San Francisco is not the only city in the United States that is suffering from people not returning to offices, that leases are not being able to be paid, that leases are coming up, and also the fact that commercial real estate, there's a lot of loans that are coming due for to be rewritten. So in other words, to be refinanced this year into next year. So there's that still hanging out there. And while it gets airtime, so to speak, it's not really being translated over into the how do we want to deal with it market. Now, I will say that the lien holder who holds the loan on this hotel, and it's a Hilton hotel, that they're walking away with $97 million loan, is Bank of America. So we need to start, to look into how these banks are reporting and what they're taking in terms of loan loss, what they're putting into the portfolio to brace themselves for for these losses that may or may not be coming. So again, brewing, how's the market dealing with it? Well, we're seeing that the market, I guess, is trying to deal with it, but at the same time, we're seeing a very large inflow of capital back into the market. Now, what has that done in the past? It has really taken and triggered that Zweig breadth thrust indicator. Now, again, on January the 8th, that same indicator was not triggered again, but the advanced decline was pretty strong. And the advanced decline was strong twice in November, and that's where it did get triggered. So that's still all in there. And if we continue to see the rotation out of some sectors, and then they're putting that money somewhere else. And so, as Michael Hartnett really spells out pretty clearly, you can't ignore the 3 B's: bonds, bullion, breadth. And so the breadth of the market is pretty strong. You don't ignore it. We ignore it at our own peril. When you've got that much coming back in, or that, and whether it's new, whether it's just been on reserve, whether it's been part of this several $1 trillion sitting on the sidelines, makes no difference. It's market. It's being put back in. And so therefore, I would think that they're going to start to, they're going to defend their positions. They're going to whatever. So again, how does that affect our account? Coming back to the SPX, a while back, a couple of weeks ago, I switched the construction or just the actual labeling for the primary B wave to where I moved the intermediate E wave up to the July highs, the July 2023 highs. That's where I put the completion point for intermediate wave A. And then our low down to the October 2023 lows was intermediate wave B. So that puts us in an intermediate C wave up, which will consist of 5 waves of minor degree, of which we have completed 1, 2, and 3. And I believe we remain within that 4th wave. We came up close to almost breaking back above it, but we did not. So let's take a look at to what we can start to put together again in terms of where we can get to. Now, the first thing that I put up is the fib extensions for intermediate wave C. And what we look for first is that wave C will equal wave A. So equality again comes in pretty strong here. That number is 5,220. I'll get that number out eventually. 5,220. That's that level. Now, what I want to also add into this is, I'm just going to put up our fibs, but not necessarily for this B wave because we pretty much have exceeded it all. So I'm going to go over here, edit, take out all those internal fibs that you see, and I'm going to put up what we will do on an irregular. So here they are. Now, Elliott taught us that when we do, or when we are dealing with an irregular B wave, that the most common fib levels that come into play are 1.236 and then 1.382. So in other words, wave B will either come in at 1.236 times the length of wave A or 1.382 times the length of wave A, right? So that's what we're comparing. Where's this B wave going to come in as compared to that C wave now that we are chugging along and getting over that high? Now, that's my expectation still, that the SPX will do with what the ES, the futures market, is already doing, and that is going to new all-time highs. So what we have here is 5,132 and then 5,325. That's the 1.236 and the 1.382. And then square in the middle is for wave C, the 100%. Now, I'm going to bring this down. Let's take a look at the daily chart where we can see what's going on inside here. Now, what can we say about all of this? If we're looking for a 5th wave, and let's just, if I'm believing that the market still has probably a down leg and that we're going to come in and get below 46.77, which I believe is 78, which was the low thus far, basis to cash, coming off of that high at 48.41. So 48, and in the cash market, it actually is going to be 48.02. 48.02. God, it's in there somewhere. I'll find it. So we're going to be looking at where can I draw and where my fib's going to come in. So I'm going to come straight down. Let's look at this here. And again, what we have is minor wave 1, minor wave 2, minor wave 3, all within the minor degree 5 wave advance that we're counting out. So we have 1, 2, 3, 4, 5, and this I'm going to say is A, this is B, and we're looking for a C wave down to finish minor wave 4. So we can open this up and we can take a look here in terms of we're going to just be looking for just retracements. And this, I'm going to say, yep, that's it. I'm going to go right there. Now here we have crossed a little bit right there. But it still could come in and be a flat in terms of where the market can get to on an A, B, C. So basis the cash market, it would be a flat. We'd be looking for a flat. So we're looking for it to drop back down to 46.87. Now, if that is going to work, then we can start putting in what we're looking for minor wave 5. And let's just say we're going to go over here and it's going to come back to that level. Now we're going to go back out. And you're going to see we definitely have levels. The first, of course, is 100%. So equality takes us almost to 5,000. It's 49.75, which, by the way, is a new high, which, by the way, would take out that high of wave 3. So it has to be considered. Above that, we're now into that irregular territory. And I cannot at this point say that wave 5 will not extend. Right now, wave 3 is the longest wave. So wave 5 can come in and just close to it if it wants, or actually it could go above, it could exceed in terms of length. Wave 3 just can't be the shortest wave. And we already know that wave 1 is. So it can just really go and get itself up into here. So our first indication is that the cash 49.75, actually 48.65, but and that also goes to a new high. But the first would be equality, 49.75. The second is 1.618. The third is 618. And so by the time it surpasses that, it knocks it out of the pool. And then we start dealing with the internals. Now, again, that's if we come back down. If not, we're still doing it from pretty much the same level, which would be that low. So the numbers are going to be the same. So if the market takes off from here, we'd be looking for it to kind of come in and do it quickly. So those are our keys there. Now, the MACD on the hourly, the 4-hour, we've got all the way out to the weekly. The MACD on the weekly is still pretty strong, heading higher. On the RSI, we still are not overbought. So while I am thinking that we can come back down and touch, we still have plenty of room to get ourselves up into here and to put in a very strong rally, to be honest with you, before on a weekly basis, the market would become overbought. Now, over in the ES, it pretty much is giving us the same type of a picture. Here again, we have cycle wave 3 complete. So we're in a cycle 4th wave. We're looking for a primary degree ABC. A is done. B, close. We're getting there. But we have broken. This high was 48.08. So we have broken above that level. In fact, we've gotten to 48.41. So that high has been broken and leaving us plenty of space, plenty of room to get up to those fib levels, which would equate or equal an irregular B wave. And that level is 1.236, is 51.16. 1.382 is 53.07. So 5,300, that's quite a bit of rally still left. I mean, from where we are, we're talking that it's about 260 S&P points to reach that level. Now here, I'm going to bring it all the way back down. So we're going to come down. Let's just come down to the 4-hour chart. And that is where I continue to count out a minor degree 5 waves to complete intermediate wave C. So minor 1, minor 2, minor 3. So 1, 2, 3, 4, 5 for the internals. Wave 1 was the longest. Wave 3 was not the shortest. Wave 5 was. So here we've come down. And yep, we've gotten close to that 48.41, but we've not really broken above it. So I'm thinking that we've got an A, a B, and I was thinking that if we could have exceeded it there, that we just get a little pullback, but we pulled back on Friday. So that made me go, okay, maybe we've still got a little bit more to come down on this wave 4. So I'm leaving wave 4 open, and I'm marking it as thus. And what we have is 382 is at 46.75, 76. But in truth, it just kind of needs to get itself below the previous low, or the low of wave A, which is 47.02. So it's not that much more, but I'd definitely be looking for below 4,700. And again, once it starts to kick itself into gear, then we'll be able to add some additional downside fibs. This would be if it starts to kick itself into gear. If we all stop right where we are, then this is going to be the ABC. The 4 goes up here, and this is going to be 1, 2, maybe 1. Excuse me, this will be the 4, and this will be a 1, 2, 1, 2. Now it's on the 4-hour chart. And pull it down and look at it on the hourly chart. All right? If I got an AB and I pull that C wave in, then we're going to get back down to here. If not, then this turns into wave 4. So this 4 that's down here gets pushed up to there. And this becomes, it's not the most beautiful, but it can be counted. 1, 2, 3, 4, 1, 2, 3, 4, 5. So it can be counted as wave 1 of minor 5, wave 2 of minor 5. So 1, 2, and then see, but this, see how that is left? A, B, C, oh, it looks like a 3 to me, and then comes all the way back down. This is why I'm labeling it 1, 2, still looking for it a little bit deeper. It makes more sense on the hourly when you look at it. It's like, oh, okay. So I get there, A, B, as high as it got, still no banana. And so 1, 2, and then down we go into 3, 4, and a 5. We end up somewhere here, but we end up below, on this level, we end up below 47.02. Put in that C wave, put in the 4, and then we begin to rally strongly. Okay. Over in the NDX, again, all of the givens remain the same. But in the NASDAQ, I have, oh, all of my labeling got taken off of this chart. I got the A, the B, and the 1, 2, and the 3, and then we're into this 4th wave here. Now, note of change. I had previously been labeled this, the intermediate A down here and the intermediate B down here. But as I try to just run the fibs for a C wave, we're already past 4.236. I'm like, okay, so we've gone beyond levels. So what else could this all be? Well, then I figured that it's like it can also be following what the S&P is doing, or vice versa. So it puts those two markets, which are so closely associated with one another, due to the Magnificent Seven, due to the high-tech companies that are really moving both markets freely. So I've always felt that they really need to adhere or be as close as possible to basically putting in almost the same wave counts. So, yep, I feel they're both in a primary B wave and also within that intermediate C wave up. And so, but I've just moved this one into the same position that the S&P is in. So in other words, the October 2023 lows put in that intermediate wave B. The July 2023 highs put in that intermediate wave A instead of the minor 3rd wave. So where it's still in a minor 3, and that's what I still think is topping out here, but within within that intermediate C wave. So this before, if this was minor 4, these were minute degrees. Still was a 3rd, but it was of minute. Now it's up at a minor level, and it just fits a lot cleaner in the market. Again, taking a quick look out, We have plenty of room. In fact, every time it has come down and attempts to trade where the blue line trades below the brown line, that is signaling the sells. And here, we're not even. So there's still plenty of room on the weekly chart to get it closer, but it hasn't broken below, which would put it into a negative tone. So that keeps upside very much in tune. Weekly, we kind of tested overbought, pulled back right there, and now turning higher again as the market relates and follows NVIDIA. Even though it closed down a buck, it's been trading above 550 pretty cleanly for a long time. So what we are doing, that was the weekly, that was the daily. Let's come down all the way to look inside this. So here we have the three. I feel this is an A, a B, and we're going to do the C wave down. So being that this is going to be that, I am going to first put in that. So we're looking at what can it do? That's the A. There's the, oops. Oh, sorry, that was wrong. I need to go back out. Let me go back out to my 4-hour chart. Open it up here. And we're going to go look for what expect. Oops. From a wave 4. And we're going to go up that way. So wave 4, 382. You see, we've already come down to it. And we've gotten close here. So I have my expectations would be because they're going to back down to 16,282-ish. We're a little bit below it. So if I'm just looking at this, then what we have is this is a possibility. So again, 100%, 16,178, which is below 282, which is what I'm looking for. That wave C should make a new low below wave A. So that's A, that's B, and we're going to come down into a C wave. This is basis the cash market. So we're looking for that. Now, going to take all that off, go back out to, going to take this off, because that's the correction. So that's my short-term picture. But now I want to talk about what are the levels here. And first I'm going to put up, let me do that again. Okay, draw. I'm going to put these in there. I'm going to go here, and I'm going to put in, I'm going to take out basically all this because it's all been exceeded. And I got 236,382. There we have it. 1.236, right? Again, irregular B. We're already there. We're already in irregular. We have been above 17,000. We've gone above 17,000, pretty well above it. Not so much in the cash market. We have in the futures market. But here in the cash market, we've also moved to new all-time highs, and that would have been at 16,969. This high is 16,764. So we exceeded it pretty well. Okay, so we're in that territory of an irregular B wave. So 1.236, 18,257. 1.382, 19,180. So those pretty high, you could say. But again, cash market. I move the A wave and the B wave up. So we're still looking for it. Now, here's the other possibility. Here's the other possibility for the cash and the futures market, that this level only completed minor wave 1. Now, how does that come into play? I'm going to bring this down. We're going to take a look at the daily chart. We have what could be considered a cup and handle here. And so if we're looking at it, you kind of just draw your line. And if that's the case, again, this is the cash, it shows much cleaner in the future, then we've got very strong potential just on basis of that to get up here. right? So the game plan would be is like you're drawing your trend line across, and then you're measuring from there to there, and then adding it to higher. And it could go. That's cup and handle. That's one of the things that's out there. Now that's just purely a technical pattern, a chart pattern, but it could fit. In any case, so what do we add next? We're going to be looking at for a C wave. And here we have it. Now, what of our fibs with C wave? First one up, of course, is where equality, 19,513. So we're now above 1.382. So the next level that I can add in terms of that fib would be 1.618. Now we know how the NASDAQ loves to just go up and exceed levels. 1.618 is 20,673. If you're doing correctly on your cup and handle, then you're going to be really up into these levels. On the cash market, on the futures market, it's going to be higher. So we've got the levels that could take us up there. If we look for a 4 and we come back down, so I'm going to come back out of my daily, come back all the way down to here, then we can start to look at just measuring from here. I'm actually going to bring it down one more. Let's go down to the hourly chart. So, you know what? I'm going to do it here just because I need to. And this, I think, is going to be there. No, it's wrong. I got to take it out. Excuse me on all of this, because I got to bring it down to here. I do it there to there. And I'm going to put it here, which is our current low for all this. And we'd be looking at equality 17,556, which just takes us to another new all-time high. But here we go. 1.6 was 8, takes us to above that 1.236 level, 18,263, and that's just for wave 5. Just a straight. Wave 5 can also extend. And then we have 2.618 up above 19,000. So you can start to see how you're getting these numbers. Well, that's how. And now they are totally within the realm of reality in terms of an irregular B wave. Now that's if we come back and hold that level. It might be adjusted slightly if we go a little bit further down. Those will come in a little bit more, but they continue to show we're going to go above, pretty well above 17,000. And that's still the expectation out there. And again, when we look at our 4-hour chart, we can see the market is not, we just came off of that little slam dunk that got us down to 16,249, which was everybody exiting out of the Magnificent Seven. Now they're moving back into the Magnificent Seven. Are we going to get one more swing out, and that's going to give us that nice C wave down? Very possible. Then we went from overbought to oversold. Now we're not really into that overbought. We still got room, and we're hedging a little bit. And the MACD came down, crossed over, crossed back. So we've been looking for this to balance itself out, for the tan colored line to get above the blue line and keep going. So a little bit of confusion in terms of the MACD, but still the MACD is still showing some not overbought readings. So that's in the NDX. Let's go over and take a look at the futures market, which is where we trade. So same deal. There's intermediate A, intermediate B on an adjusted level, right? Before I was counting, this is minor wave 3, minor wave 4, just a slight adjustment. Now here is where I put the difference. This is the big difference. This 1, 2, 3, 4, 5 could just be minor wave 1, and we're looking for a minor wave 2. A little bit different in the cash market. It's 1, 2, and I put the 3 there, and this is the 4. This is the alternate. And the alternate is suggesting something way different. And that, my friends, will get us quicker. So, and I did this on purpose. I'm showing you one we could use as our preferred count, which would suggest that we have 1, 2, 3, and this all gets switched around a little bit. So this could be 1, 2, this would be minor 3, and we're in a minor 4, come still looking for another low, and then we go running up in a minor 5th. If not, I am going to leave it here on the futures market. So an ABC, minor wave 2, we rally with some strength. We rally with some strength. So, because I think that the market can come swinging back down, because it got a little cloudy on Friday. All right, we did that. If that's A, and we did look at that. 3, A, B, C, 3, 1, 2, 3, 4, 5. Very possible. We just need to get below that. All right, so I am already labeling it. 1, 2, 3, 4, 5. All right, so again, there's the B wave. Let me just pull this back in a little bit here. This is wave 1, A of 2, B of 2, a C wave of 2. So it needs another couple of days of like this activity, bringing it all in. We do have, I got to just double check. No, that's not going to work. Meta reports on February the 1st along with Apple. Amazon reports on February 1st along with Apple and Meta. Google reports on the 30th. So we're starting to get when they're all going to start to report. Intel on the 25th. Microsoft, I believe, is coming up. Microsoft on the 23rd. Netflix on the 23rd. So you can see we're grouping them together. They're really going to come flowing out. Tesla on the 24th. So next week, we start to see, actually it probably is the week after. So next Sunday is the 21st, and then we have the following week. So we got to get through next week, and we might see where they start to bring it in. They start to bring it down. Again, I don't have all of them, so I'm sure there are going to be quite a few. I could pull up a calendar at some point, maybe bring it in on Tuesday. So I'm kind of looking for this to come back down in a wave 2, finish up that wave 2, and then begin to really rally with some strength. So again, next week, play around, come down, and then, because it's a holiday shortened, tomorrow is Martin Luther King Day here in the U.S. The markets are closed. I believe they're going to be opening this afternoon in Globex. They'll trade in Globex till tomorrow morning, U.S., and then reopen tomorrow afternoon, early evening in Globex again. So all in all, I still think we got more to go to the upside. But I hope I'm putting this into perspective as to what could propel the markets up there. Now, I know there's a lot of people that they're trading off of my long-term view, which continues to suggest we will be reaching a primary B wave high. And so there's a primary C wave down, which would then in turn complete the cycle degree 4th wave. But we're not there yet. So if you're shorting here in anticipation of it dropping down to here, you're going to get killed in the interim, because we still may have 1,000 NASDAQ points to go or more before we reach that high. So again, what does that reflect to in terms of if you're shorting stocks and everything else? Now, there are periods to short. So if you're swing trading, yeah, I likely, depending on what the market does when it reopens on Tuesday, I may be, moving right along with you. I'm going to be selling. I will follow what the price action tells me. But my larger count is allowing for. Now, there are alternate counts that I have, which would continue to suggest that maybe we're all done. But the way that the market traded on the 8th really laid some things solid to me. The fact that the Feds are announcing they're going to pivot. I think what's important there too, folks, is we need to keep in mind as to why the Fed would start to cut rates. And is it really a bullish story for equities for that to happen? It's a bullish story for the bond market. Bond prices will go up. But is it a bullish story for the equity market? Should equity prices continue to climb because the interest rates are coming down? The interest rates may be coming down because we are dropping into a recession. We are dropping into a deflationary period instead of an inflationary period, which would allow the Fed to start to pull in, because if it all happens as they're thinking, then inflation will drop below the unemployment rate. Then basically they're meeting their goal. So are they ahead of themselves? Possibly. But we'll see. We'll see. Okay, I'm going to end it right there. And wish everybody a very good balance of the weekend. Again, tomorrow the U.S. markets are closed. And so the next update will be definitely on Tuesday, the 16th of January. If we get some really strange moves in Globex between today and tomorrow, I will step in and make an update tomorrow afternoon.